Hi friends, my name is Rocky Outcrop. This is Bitcoin and Ethereum FOMO-free technical analysis. We're going to be looking at Bitcoin versus the dollar, then Ethereum versus the dollar, then Ethereum versus Bitcoin. And if we've got time, we'll try and fit in the Bitcoin dominance chart and have a little spy on the NASDAQ as well. If you like, just zoom myself down. If you think that sounds interesting, keep watching video, do. Let's try and build up a picture of where the prices are at the moment with regards to the Bitcoin dollar pair. And this is the Mexico chart up behind me at the moment, and you can see the current prices are 12,425. Obviously very much high and looking like we could be coming in here to try off of our wick high from August there at 12,500 or so. That is certainly on the cards right now. At that point, will we find prices pushing on past them or retreating from that area? Things have been quite positive so far with regards to the price action, all moving up past these areas. Let's build up a little story about where we are just now. Go down to the 24-hour time frame and you can see that there's this parallel channel, and we seem to have pushed outside of the top of this area. What is this parallel channel and why is it positioned up here, just encapsulating these two candles? Well, if I just poop the object tree up there and poop this pitchfork back onto the chart, no, not that one, then we can see that this is the pitchfork we've been talking about for the last couple of months, really, and how this has interacted really quite well with regards to the key areas here, the upper warning line, the upper line, the median line, the lower line, and the lower warning line. And we can say, well, perhaps we're breaking outside of this areas now, and this is no longer going to hold any relevance for us, but we'll be able to draw some relevance back out of this thing again in a second or two when I move on to talking about Fibonacci retracement points. But right now, will we see the days ending above 12,351 is kind of the question. Right now, of course, we're up here at the 12,415 area and looking to potentially challenge our wick high from before at 12,500. So we can see that potentially, this is obviously quite bullish movement and everything being quite good, of course, and we've come back into the point of contention again of over here in August where we had our previous highs. If we're able to continue up the way, then of course we're continuing on the trend from March and everything's been pretty good in this long bull run that we've been in for the last several months now. Okay, but there's a couple of things that we can look out for. So let's just do that now real quick. If we take away those two parallel channels and instead stick on a Fibonacci or two, how about from the September lows over here to up to the highs where we are just now? What does it all look like if we were to see any pullbacks from this region? And we can see that there's the 236 comes in there at 11,800 or so, the 382 at 11,420, the 50% line in there at 11,121, 11,113 actually, and the 618 comes in there at that golden pocket's in there at that 10,700 to 10,800 region as well. Now, we could look even further down than those three or those four. But if I just wanted to draw particular attention to those four with regards to the structure here that we're in, really, then I can do that quite easily by popping that pitchfork, no, that one, cheapers, this one back on again. And you can see how these line up really, coming back into below this upper warning line would be coming in to challenge that 236 at 11.8. Coming back down here to the upper line would be to challenge that 382 at 11,420 or so. Coming back down to the median line would be to challenge that 50% in there, 11,115, and the golden pocket retrace here comes in at that 10,700 area where we have this lower line on this pitchfork, and of course that would be putting in a conceivable higher low overall if we discount this area as being a low. Of course, coming down for 382 Fibonacci retracement could also see this coming in with a higher low overall, and somewhere between this 382 and this 618 they could say is potentially a sort of profit target for people should there be some sort of retrace in around about that zone at all, okay, if that were to potentially be the case. Now, this, of course, is very much live and in flux and not confirmed in an invalid Fibonacci, but if we do see the pullbacks from this area, then that's the sort of thing that we could be looking at if we were to see prices pull back that way, okay? So there's a few other things then that we could also say if prices were to pull back down to around about here, then we'd be looking at an 886 Fibonacci retracement from the move from the August highs down to that September low, which could then, if this here was also some sort of Fibonacci retracement area and this came in as an 886, you could then think about having a Gartley on the go. So let's build up that picture and see. Now, it doesn't work at the minute, okay? It doesn't work at the minute, but let's just do it for a minute. There's a lesson to be had, I suppose, in here as we look amongst these things. So I'll just hide off that box for just now and the pitchfork there as well and put a couple of Fibonacci's on here, starting off with the X and A point Fibonacci. You can see it just kind of sneaking in there on the right hand side. Zoom in a bit so you can see this is the 3-day time frame instead. This is taken from the lows that we had over here on the 9th of May, just down there at the 8,000 or so level, up to the highs that we had on August the 17th with that, or the 16th with that wick there in there at 12,500. And then the prices on the retrace from point, which would be A to B, came down as far as the 618 here, perfectly at that 9,780 area, just failing to fill in that gap that was on the charts and turn around from there for this move towards the top side. So if this was an X to an A point, then the A to the B would work with that 618, which is why then we could easily look towards this area and ask if we can get a 886 here, then how would that look? So from the August highs to the September lows, which is from this high here to this low here, the 886 comes in there at 12,209. So finishing up above that, of course, is quite good and whatever else. It doesn't necessarily completely invalidate this idea just yet. But, if we didn't see a turnaround and we pushed on past that zone, it very much would be invalidated, okay? But there's a potential for this to work. Potential. Just an idea. And then, of course, if we did that, that would be our B point to our C point, in which case then you'd be looking for the D point, and where would that come in at? And I've written out here already the instructions for how to look at these things with this ideal Gartley pattern chit chat. So a move from A to B should be the 618 of retracement move A to or X to A. So this is the X to A Fibonacci here on the right that I'm hiding and showing just now, and we got the 618 coming in here, which is of course then X to A, so X to A, so then they're up here, and then A to B down here to that 618, and then from B to C would be that 886 move here. So, it could be a 382 or an 886. Well, A to B 886 comes in there at 12.2. If the retracement of BC is 886, then CD should extend to the 1618 of move BC. So this is BC. So let's get up the BC Fibonacci. Is that meant to be the BC? No, that's meant to be the BC. And then where does the 1618 come in at here? Down here at 8,174. So that's where your D point would be coming in at. And what would that look like? Do I have a Gartley? Don't have one here. I can just kind of quickly sort of pop this on. What that would look like would be this. If this were to obviously turn around from these points here. So that would be kind of what your next stage would be looking to if we see a turnaround. Now, of course, this could obviously I'll just turn it to be pants and not happen. And if that's the case, well, that's the case, whatever. But we're in and around here with the potential for this idea to kind of come to being. Whereas we could also look at this in terms of whether or not we get a turnaround from these points here, just simply looking down to that rectangle area in terms of our potential profit taking zones here with this zone between the 382 and the 618 if we were to see a pullback from this point, and of course whatever else. So are we seeing anything which really would indicate that that's the case right now looking at the price action? Well, we have this high which is higher than our previous high over here on the RSI. It's also convergent that way. The stochastics is also convergent. So we have those two positive aspects of things, and we also have that convergence on the DMI as well. There is a degree of this sort of hidden, not hidden, just sort of bearish divergence between our highs up here and our most recent highs. But of course, that could just easily fade away, and to do so, you'd have to come up into these overbought territories anyway, which would obviously mean an increase in price action. So, looking for this here is premature. And so things are looking quite strong in that regard. What about the 12-hour? Do we see any sort of divergences? And we don't here between these highs now. Looking back the way, it's all kind of burned itself out from the previous ones we identified. What about the 2-day time frame? Do we see any there? No, we don't. This high that we're at now at point C here is, of course, lower than the point A high here in terms of the RSI on this time frame. So there is the bearish divergence potentially showing here as we look between these two areas. Should we actually get a close there? And we're looking between these two areas just here. Of course, these being our last two actual highs, this one that we're currently sitting in and that one there, ultimately forming point B into just looking like a higher low as part of the trend from March. So that's kind of, the potential for some there. And on the 3-day time frame, then we can see that it is the same thing, but that period where it was divergent beforehand, looking down the way again as a quick reminder, where it was divergent beforehand, and it's rich to say it now, we'd have to push into the oversold areas to kind of come in here and challenge that, unless we did see a pullback from right here. Because it's earlier than than the head of this head and shoulders, you're looking back the way and kind of, pushing it back. But when we go up towards the 3-day time frame, we can see how that kind of amalgamates into this little head and shoulders pattern on the RSI before coming down the way, and we're actually pushing up the way past that already with this lower RSI. Does mean as well, of course, that there's just lots more room to go if we wanted to go up the way and just have that convergence across the time frame. So that's what we're looking at in terms of the Bitcoin to dollar coin pairing at the minute, right? Of course, just the simple idea that the next target is going to be 12,500, as we spoke about, back on Monday. Let's just then dive on over to the Bitcoin dominance then, or the CME chart here before moving on to looking at Ethereum. You can see that now we have actually come up here and gone and touched in with our second profit taken line. In fact, I think actually I moved this down slightly from where the wick was, just to just in this area. We've not, I suppose the fairest thing to say is we've not quite hit that yet, up there at the 12,600 area. Not quite hit that quite yet on the CME charts, but we've done enough in terms of moving up the way, having come up to our first profit taken line. There's the potential for us to see, if we don't get a higher high and break that wick, where would we see turnaround at? Or else, of course, our target is indeed where that wick is. And we've got this Fibonacci coming in here, suppose giving us a little bit of an idea. If we did see a pullback down past 11,800, then you'd be looking at maybe going down for those lower targets. Anything above 11,900, and you're kind of all right with regards to that one just currently. So there's that on the go. There's these couple of gaps that we have down below, which, one of them's right on the 382. If we were to get a pullback to the 236, then turn around at 382, that sort of thing could happen as well as part of another sort of higher low structure. We have this divergence showing up here in the 3-day time frame. Go down to the 24-hour time frame, see that we're equal highs here with our bodies from before, and see that this RSI here is ever so slightly lower than this one over here. So, there's room to go here with this one just as yet. There could be some divergence, maybe not. It depends on how things go with this one over the next wee while. So that we've still got that target in there and everything. That's kind of just what we're looking at. If we do see a pullback, then there's the negative side of things. Movements beyond that zone will then, there's plenty of other things that we could be looking to. I'm just going to leave that to everybody else that you're looking at in terms of YouTube and technical analysis just for now. Anyway, suffice it to say that we've had this line up here at 13K for a while, and we've already covered a bunch of stuff in the past in terms of where we could be going with measured moves, such as up towards the reasons why we could go up to 14K and all that sort of stuff. That's all been covered in the past. Easy peasy. Instead, let's go to the Bitcoin dominance then and take a look at this. Well, I was wondering recently, were we in a sort of ascending triangle formation, which then broke towards the top side? And if so, would that then come in as being a sort of ascending wedge? And if this is an ascending wedge, do we see a pullback here? Because what we've seen is an increase in the dominance of Bitcoin as the Bitcoin prices have gone up to their highs so far the year, which can surely only translate in one way. If this has been going up the way while the Bitcoin price has been going up the way a lot, then you're thinking that money that's coming into Bitcoin is coming not just from fresh, clean waters, but also from the altcoin market itself, as that dominance kind of leans over towards Bitcoin. And we're at 62 for dominance just now. So like we spoke about on Monday's voice chat, here we are in this region. Would we see a pullback from this point here onwards? And how could that affect the prices? Now, going down towards the Ethereum Bitcoin pairing here, and you can see that we've actually done exactly as well what we talked about the potential for doing in terms of coming down towards this lower area here and filling out this wedge some more. But we've also moved down past the neckline of this head and shoulders area that we had before. Either this breaks towards the downside and we're looking at coming down to the sort of 0.025 area for instance, with Ethereum to Bitcoin, or we see this move towards the top side. And how would that translate? So, we've had this, we can see how the dominance has gone up. We can see how the Ethereum Bitcoin pairing has gone down. And we can look over here and see the fairly lackluster in comparison performance of Ethereum in its pairings compared to the dollar pairing for Bitcoin. And seeing this on a 3-day time frame, or something that you can show you that for some time now, we've been kind of essentially consolidating in this area, and we've not really stopped that yet. If we were to move outside of this zone, of course, we could come up fairly high towards the 440s area or 420, etc. But until we really push past the 380s, we're not really doing much. We've still got this Fibonacci in here in play, which, if we movements down past 376, could see movements down to 364, 354, and 341. We did already get that 364 pullback in the last couple of days. Price action, we've kind of had this one fairly nailed recently. So if we do see movements down past those areas again, then of course we're revisiting that. Movements up past this 380 zone and into the 390s does give us a good chance to push outside of the fake out territory of this thing. I want to see $400 get taken, so that we can say that we're on for the measured move up towards the 430s. But until such times as that happens, that's not happened yet, and we're looking at these areas and asking questions and saying, well, if we see a pullback here versus the dollar pricing, and then of course, then how would this translate here into the versus Bitcoin one? Should Bitcoin stay where it is? Indeed, if we see a pullback then in terms of the Bitcoin pairing, will we see this drop down the way towards the lower end with money moving out of Bitcoin and into these other alts? And would that include Ethereum? And then would we see this coming back up towards the top end of its wedge, which is a bullish pattern and should move towards the top side, statistically speaking? Just if you want to put faith in statistics. Likewise, bearish patterns should move towards the lower side, statistically speaking. So that's our dynamics really with regards to the price action. How long has this episode lasted? It's lasted 17 minutes, 53 seconds, so 18 minutes. I have covered what we need to cover. Ethereum is a bit lighter than the Bitcoin one. I'm just going to have to leave it really with regards to this. Let's take a look down the time frames and see what this not down the time frames, 24-hour time frame. Oh, and look, yes, so the musical chairs stopped at the edge of our head and shoulders neckline zone. The prices then dropped all the way down. Let's just have a wee measure off the back of that. If you're just taking it from that point down, 5.5% volatility coming into play here at the end of the musical chairs zone box for that white background area. So it does kind of work. Which is nice to see, of course, as well. But we knew that this was a possibility. We spoke about it. That's why we had in regards to this wedge and everything on the charts as well. So that's cool. That's good. That'll do for today's episode, I think. I really do appreciate people tuning in. If you want more detail on the Ethereums, then let me know. But Ethereum was performing fairly poorly in terms of its watch time and whatnot recently. So I decided to amalgamate it with this one. And of course, as you can see why, it's really useful to look across the markets, get a firm handle on where we are and where we could therefore be going. I feel like I've left it a little bit light in regards to movements up past these zones of this previous high. Suffice it to say that we have already mentioned targets like the 13K and why we could be going up there, and there's various other ones as well along the way. For instance, if this CMEs comes up to push past these zones here at 12,650, then of course, we're looking up towards these previous highs here, for instance, just, that we had back in June. Looking at the Bitcoin spot price chart, looking back the way and comparing these highs all the way over to last year's June highs as well, then of course you can see that we've got these two previous highs up there in 14Ks, blah, blah, whatever, there's plenty of stuff there. But could we see something like that work out as well? It could happen. It's a little bit kind of much pushing it. I'm pushing that story too much at the minute because it's not really the case. Just if it did, it'd be interesting is all. And this would be your profit taking if we do see any pullbacks down at these areas here. Otherwise, you know, you're just talking about small moves which can be managed within your sort of context of your risk management. Thank you so much for tuning in. I'll catch you next time.